Good evening, everybody. It's Saturday, June 24th. My name is Dave Coker, and this is Talking About Finance. And good evening. It's a lovely Saturday in Essex, and we're totally excited to speak with you this evening because we're going to talk about finance. In a way, few speak of it. We're not going to talk about buying low, selling high, or any of that other bullshit. We're going to talk about getting paid to own assets. Oh yes, not only is it possible, it's what I do. It's what I did to achieve financial independence way back in 2002. Investing only in assets that pay me to own them. Reinvesting any and all cash flow into additional assets that pay me to own them. This is a simple way. It's a profoundly simple way to achieve financial independence that few people have tried, but all people could do if they wished. But why don't they? Well, this approach isn't fast. This approach doesn't promise to make you rich overnight. No, this approach takes time. But it is far, far, far more certain than trying to trade the markets. And by that I mean day trading, swing trading, momentum trading, whatever you call it, it doesn't matter. This is the only way to be sure. There's no shortage of fraudsters who claim they make money reliably, consistently, day in and day out by trading. But we know they're lying. They're flat out lying. Even professional traders only make money about 60-65% of the time. But these fraudsters, they either claim to make money all the time or they have some unrealistic percentage, 99%, 95%. If I'm having a bad day, 90%. A flat out lie. So what you have to do is simply invest only in dividend-paying stocks. Invest only in property, rental property. You take all the money your investments earn and reinvest them in more assets that pay you to own them. Pretty simple, isn't it? Yes, yes, yes. And it didn't cost you a penny following this approach. If you do this, you're going to build wealth and eventually you will achieve financial independence. Or what I mean by that is you won't have to work again unless you really enjoy what you do, which is where I find myself. I've been here since 2002. You can join us. But enough of this. Let's talk about finance. The S&P 500 closed down about 1.39%. Four sectors outperformed the S&P 500. Healthcare actually finished up. Consumer discretionary, consumer staples, and consumer services, communication services, all traded down for the week. And seven sectors underperformed the S&P 500, specifically industrials, materials, financials, information technology, utilities, energy, and bringing up the rear was real estate, dropping well over 4% on the week. This was a week of changes. Not really sure what's going on, but the bull market narrative seems to have lost its edge, at least over the past week. The VIX traded down to 13.44. It opened the week at 13.54. No real big move in the VIX. The 10-year note closed the week at 3.74%, down about 2 basis points week on week, and about 10 basis points year to date. Oil closed the week at 69.26. It's down about 3.7% on the week and down about 13.7% year to date. So a sharp drop in the price of oil. And so yesterday was Friday. I bought Bitcoin and I bought Ripple every Friday. It's important that we do this. And we see that Bitcoin had a bounce up, a welcome bounce up. So now let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. And I'm painfully aware of social protocols here in England. We have to be introduced. We are global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everybody. We know lots of people at different financial institutions. And it's always useful to help out with references or to help out with vetting potential candidates for jobs in industry. And a lot of this work we do off the record, unofficially, because there's a lot of fraudsters, a lot of charlatans especially now that many are claiming to be experts in artificial intelligence, and they're trying to get into industry. And this week we're on Wall Street, we're in the city of London, we're also in Frankfurt, San Francisco, and Shanghai. We are absolutely everywhere that matters. So let's go. 7 slides for 7 days. Good golly, this is going to be awesome. And we're seeing such low volatility these days. And, you know, I like this expression, volatility in the market's like a bad hair day. Yeah, when it hits, it's like a big wave coming through absolutely everything. And we've got relatively low vol right now. I don't know why this gentleman's hair is so puffed up like that, but things are going to change. And in the stock market, yeah, once upon a time, we could say this wasn't true, but over the past 10 years or so, yeah, it's true until it's not. Price is made up and earnings don't matter, yeah. How many times have you seen a company booking negative earnings trading at ridiculously high valuations? When looking at price to sales, price to forward earnings, or price to book. It's absolutely incredible. And it really, really is. What's going on in the markets these days? Are they manipulated? Yes. Are they rigged to the upside? Oh, yes. Still, all we can do is play the game. That's all that matters, guys, because a rising tide raises all boats. And here's an interesting question. Of course, this guy's asking if he's trading better or the market stopped going down. Yeah, dude. The market goes up. It really doesn't matter what you do unless you totally screw up. You're going to make money with your trading. And then you can brag to people about what a good trader you are. It's all rubbish. Just wait until there's a big, sharp correction. I didn't hear a lot from these clowns in 2022 because absolutely everything was trading down back then. We'll see what happens. And yeah, the times have changed, but not really for the better, I don't think, in my view. And, you know, Papa Simpson, Old Man Simpson, Grandpa Simpson's got a point. But he's not really totally switched in. You know, banks always made money, created money out of thin air. It's just that the regulatory environment, the rules laid down by the government, have gotten a lot looser, and now they're creating an awful lot more money than they ever have before. Is this a good thing or a bad thing? Believe me, it's a bad thing. Why do you think I put so much of my money in tangible, real, physical assets? Of course, I got a big stock portfolio, but I also have big positions in gold and silver, and especially rental property. Guys, you have to do this. Get some tangible, real, physical assets. Because I think they're not done creating money, and I think we haven't seen the worst of it yet. You just wait until there's a downturn in the economy and the people start whining. Already in the UK, the central bank, the Bank of England, had to make a statement that they wouldn't be bailing people out from their mortgages, and there was a lot of wailing. Amazing, absolutely amazing. You don't need to buy a home if you can't afford it. And if you can't afford it and you buy it, don't expect the government to bail you out. It's absolutely amazing. And here we go. Once again, Steve Cohen used to run SAC Capital until, trying to think, it's like 2016 when he was driven under by SEC, forced to close SEC by the Securities and Exchange Commission. Then he opened up Point 72. I know people that were at SAC. And yeah, best traders, his best trader. We're talking about a company that just throws money at people 63% of the time. Most of them make money roughly half the time. So yeah, it's really wild that people tend to brag about making money all the time. And what's even wilder is that people believe them. But I can't blame the victim, because that's who they are. They're victims. And yeah, Bitcoin. We've seen a nice bounce up in Bitcoin presently. And this is an interesting one. Maybe the Terminator came back to buy Bitcoin cheap. Entirely possible. We just don't know. And this lovely chart was the vertical green line. That happened last week when a whole bunch of information, a whole bunch of news just came together. And there's this wonderfully positive confluence of events. And Bitcoin spiked. And it's been tweaking. It's been trying to get up to about 31,000. It's passed over a couple times. And we're happy here. Let's see where we go. Remember, guys, the halving is coming up May 24th of 2024. So it's close, guys. It's very, very close. And anytime there's a halving, we see a cyclical uptrend in the price of Bitcoin. So make sure you lay down those, stack those sats. You start buying Bitcoin if you haven't been buying it, or you just keep buying it. Thanks for your time, guys. A wonderful evening as always. Warm here. We were at the pub. We had some pints. We might be going back out. Why not? Take care, guys.